happened between this horizontal line and this line is representing 2020's price action. Now let me show you what happened. This is the accumulative phase of the market. You see, this was consolidation for 1, 2, 3, 4 weeks. Consolidation. Like I said, the consolidation represents the accumulative phase of the market. Then there was a false breakout to the upside. This is a typical example of a Judas swing. So after the consolidation phase of the market, there was a false breakout. Then what happened? Manipulation. This was a manipulative phase of the market that moved down. So what exactly did they do? Now, look at what they did. Let me get rid of light again. Look at what happened the previous year. The year 2019. That was the year before 2020. Look at the year 2019's price action. That was the highest the market went, right here, and this was the lowest. Now let us place a horizontal line on 2019 lows. This was a low of 2019. Let's extend it to 2020. Can you see what happened? They traded below the lowest point for the year 2020, for the year 2019. That was the lowest the market went in the year 2019. This is it. Let me place an ellipse over there so you can see exactly what I'm talking about. This is what I'm talking about. That low, that's what I've extended into the following year, which was the year 2020. So they traded below it and then traded right into an institutional candle here. For those of you who are wondering what an institutional candle is, they are also called order blocks. Go to the channel and watch my video on order block theory. You'll understand what I'm talking about. So look, they cleared 2019 lows and traded right into an institutional candle, which was from the year 2017. Then the market started to move upwards from there. Let me zoom into it, see exactly what I'm talking about. This is the low they took out, which was 2019 lows. This is my favorite kind of setup, where they clear an old low and trade into a bullish order block or an institutional candle. I love such setups. So they clearly took out this low and then traded right into that bullish order block, which is also known as an institutional candle. And then they started to rise. Euro USD has been bullish ever since that time. So they moved down to clear the old low and then trade into that bullish order block. It's the manipulative phase of the market. That's a manipulation phase of the market. This small consolidation you have over here is the accumulation phase of the market. So it's accumulation, manipulation, distribution. You can say AMD. So the whole of this move from here all the way to here was the distribution phase, and that was a true intention of the market regarding to Euro USD in 2020. Other blocks are what I'm referring to as institutional candles. They are the same thing. You can watch that video. So this is exactly what I'm talking of. Accumulation, manipulation, distribution. Some people call this the power of three. Some call it AMD. It's the same thing. Now for the year 2019, this spread a lot of consolidation. But even within that consolidation, there were still nice opportunities. As you can see that it was consolidating, but it was consolidating lower. It was consolidating lower. So this was where the market opened in 2019. Let me show you. It opened here, right, on this vertical line, this black vertical line. And this was how high it went. So where exactly did it go to? Let's place a horizontal line there. This is it. In actual sense, it was supposed to trade into this institutional candle here, but it didn't. That's what it was supposed to do, but it didn't. And the reason it didn't trade into that institutional candle is because there's another one here, and it chose that one instead. So it opened over here, then traded up. So this one, the faces of the market were very, very obvious of the market very well before you can see what I'm seeing. So the market opened here, right at the bottom of this bullish candle. Then traded up into this institutional candle from the previous year, 20 was the manipulation phase. It lasted just for a week. Okay. Then it started consolidating lower. But as you can see, even though so for the whole of the year 20, this was the weekly time frame. And so I'm sure there were other opportunities. There were opportunities on the smaller time frames. When the market is consolidating on the big time frames, when you go down to the smaller time frames, sometimes you can still get opportunities. So to answer your question, Mr. Rashid Kwe, the whole of 2019, this pair was consolidating. But even within that consolidation, there were still opportunities. This is not a market I would have liked to participate in. Because trading a consolidating market is very, very frustrating. Now, in Bibuchi, Amadiri is asking, please, what is an institutional candle? They are candles where institutions are very likely to buy or sell. You know, the institutions also trade. Central banks, investment banks, hedge funds, these are all institutions that also trade. These are candles that are very, very likely to trade from or to. Now, it's a whole topic on its own, and if you want to understand it, you have to go and watch my video on order block theory. I've mentioned it, I'll mention it again. So now let's quickly go down to the smaller time frames. So look at the examples of what I've been talking about so far. Yes, look at what gold did last year. There's a weekly time frame. There was accumulation. What's the difference between it and other candles? Please, like I said, it's a whole topic on its own. I cannot teach it here because we are treating a different topic. Now, gold consolidated. That was the accumulative phase of the market. Then this move down was traded a very tiny institutional candle over here. As soon as it touched it, it started going up. So for the whole of 2020, gold was very bullish. See, this was the accumulation phase. This was manipulation. The move to the opposite side, we can also call it a Judah swing. Then this was the distribution phase of the market. Like I said, these things always happen at the beginning of every period. And when I say period, I'm referring to yearly, monthly, weekly, daily, session periods. That's what I'm talking of. Let's look at this on the smaller time frames. Let's go to my favorite small time frame, which is the 30-minute time frame. Today, there was a typical example of accumulation, manipulation, and distribution on gold. Unfortunately, I missed that setup. So I couldn't even give it to you. Now look at something. I'm going to add a tool, and I'll use it to explain something to you. It's called market hours. Now, what it does is very simple. It just shows you the various sessions of the market. That's all it does. It's not an indicator that's coming to show you where to buy or sell. No. It's just showing you the various sessions of the market. That's all it does. Now, that information can be very, very powerful. Look at what happened. Now, on a 30-minute time frame, from one vertical line to the other represents 1 week, one day's price action. So this was what happened today. From this vertical line to this vertical line. The day is not over yet, so gold is still trading the daily range. That was what happened today. So from this vertical line all the way to this vertical line represents today's action. So what happened? Look at the beginning, right on this the red vertical line here, the first red vertical line. More consolidation. And that happened during the Asia session. How do you know the Asia session? Please look down here. I hope you all see this short yellow horizontal line. Like I said, these things happen on every time frame, right from the monthly time frame down to the 1 minute time frame. So the opening or the beginning of this yellow horizontal line to the end of it represents Asia session. That's the beginning of the trading day. The Asia session is always the beginning of the trading day. So let us move to represent Asia session. So that is our Asia session box. Okay. Now look at the previous day. This is what I'm referring to. I'm referring to this day. That's the previous day. Look at what happened. So that was yesterday. Yesterday was Monday. From here to here is representing Monday. So what happened during Monday? This red horizontal line is representing the New York session. As you already know, the market has got Australian session, we have Asian session, we have London session, and we have New York session. But then as far as these concepts are concerned, we pay attention to only 3 sessions: Asia session, the London session, and the New York session. So look at what happened during yesterday's London New York session. I'm going to create a box for it by placing vertical lines on the close of it and the beginning of it. Look, I'm referring to this line over here. Okay, this line. You see, I have placed a vertical line on the beginning of it and another vertical line on the end of it. So everything that happened within that box was yesterday's New York session. Now look at what happened during today. So let's place a high. Let's place a vertical line on the high of yesterday's New York session. This is it right here. That is it right there. So what did the market do today? It traded above yesterday's New York high. After the accumulation, the manipulation phase went up to trade above yesterday's New York high and traded. Look, once again, if you want to understand what I mean by institutional candle, please watch my video on order block theory. This was yesterday's New York, the market traded during yesterday's New York session. Now, there was a little consolidation. That's the accumulation phase of the market. You target your sales from. So, this is a typical example of what we refer to as a tether to sell. There's also a video on it on the channel. If you want to understand tether to buy and sell, watch that video. It's right into institutional candle. Then look at what happened during New York Open. Okay, the sell actually began in the London session after it traded back into that institution candle. So you could have been entering this trade somewhere here. You have sold from here. And you would have made good money today. So we have the accumulation phase of the market. Then we had the manipulation phase. Then this is where the sales began from. That was the distribution phase. That was what happened today as far as gold is concerned. Now, there are days you will not see this happening, especially on days when there's a lot of consolidation. In such days, you usually don't see these things. Now, have you ever wondered why, after very impulsive moves, the market always consolidates? When the market goes up for a very long time, you see that it consolidates before it either continues going up or comes down. And if the market sells for a very long time, it consolidates before it either continues going down or comes back up. The reason is these big moves are engineered by the institutions. When I say it's engineered by the institution, what it means is that the institutions are a big part of those big moves because retail traders cannot cause serious big moves because retail traders don't have enough volume as compared to these. Look at what happened yesterday. This is Friday's price action. Like I said, on the 30-minute time frame, from one vertical line to the other, represents 1 day. These are the vertical lines I'm talking about, the dotted black lines. They are also called period separators. Let's look at what happened. This was the accumulation phase. You could see there was some small consolidation. Now the market traded lower and then traded higher. Why? To find an answer to that question, look at the previous day. Where is the previous day? From here, I think I have to highlight it first. This is the previous day. Now, what was the lowest this market traded the previous day? That was last week, Thursday. Look, this was the lowest price. From here to here, it's representing last week, Thursday. What was the lowest it traded? This was last Thursday's low. Let me highlight it. So those of you who still don't know what I'm talking about can understand. That was last Thursday's low. So I extended that low to the following day. Now let's see what happened the following day. That's last week, Friday. After the consolidation, it was a accumulation phase of the market. The market traded down. The market traded down like this. And it did that between Asia session and London session. Then when New York session came, it went up. Now this is good. This is a very, very volatile pair. So that's a lot of money you are looking at. Once again, what happened between this horizontal line, the red one here, this one, and this one, is representing New York session. Okay, so see when the move to the upside started, exactly on New York session. How could we have traded this? Would have waited for them to clear those lows, which they did. Let me see if they traded into an institution candle. Yes, they did. Where's the institution candle? Right here. Once again, if you want to understand this concept of institution candles, please watch my video on order block theory. This is the institution candle. For those of you who know what order blocks are, you understand what I'm saying. Those who are part of my earlier classes. So look, very interesting stuff happening here. The market opened during Asia session, consolidated, then we had the manipulation phase. Now, like I told you, the manipulation phase, if the market is going to go up, it's always coming down to clear an old low. And if the market is going to come down, it's always going up to clear an old high. So the old low in this instance was the previous day's low, which is this horizontal line I have drawn over here. So they traded below it. They traded right into that institution candle from few days earlier. Then what happened during New York session? A very nice move to the top. Now this is gold. This is quite volatile. From that point to this point alone, it's just 187 pips. That's a lot of money, ladies and gentlemen. 187 pips. If you have a big account and you are trading with a standard lot, that's $1,886.